Would you believe me if I said I got paid 960 US dollars just to agree to buy stocks I already wanted to own? Sounds backward, right? But this is a real strategy I use. And no, it's not some get rich quick scheme. It's called cash secured put. And in this video, I will show you exactly how I did it with three stocks: Palantir, Doximity, and HIMS. So here is how this strategy works. And I'm going to talk to you about what is actually a cash secured put, how I earned $960 upfront without owning the stocks yet, and what happens if I am assigned these shares, and how I plan to use the wheel strategy to create a repeatable income stream with these stocks and other stocks that are on my watch list. But real quick, this isn't financial advice. I'm just a regular guy who is just sharing what I'm doing with my own money. Always do your own research and due diligence before investing in anything. If you want more tools and insights I use, check out my new site www.streetwiseeconomics.com. Let's keep it simple. A cash secured put is basically when you agree to buy a stock at a certain predefined price and someone pays you cash upfront just for making up that promise. So it works like this: you pick a stock you actually want to own. Two, you choose a strike price, the price that you would be happy to buy it at. Three, you sell a put option at that price. Four, you set aside enough cash in case you are assigned. Boom, you get paid a premium upfront. So if the stock stays above the strike price, you keep the money at nothing. If it drops below that price, you buy the stock at a discount and you still keep the cash that you got. So it's a strategy that rewards patience and planning, not hype. So let me talk about the real trades that I took. I made $960 from these three trades just by agreeing to buy stocks I already wanted. Here's what I did. Palantir, I sold a $160 put that expires on December 19, 2025. That's almost a month out from today. And someone paid me $6 per share, or $600 in total, because one option contract has underlying 100 units. So for just agreeing to buy Palantir at 160, 100 shares drops to that price. Notice that I said if it drops to that price. Now, that means if I do get assigned, I'm already buying it at $154 because of the $6 premium I have already pocketed. And I'm cool with that because I like Palantir. I've done research and I believe in its long term story. I did the same thing for Doximity. For Dogs, I sold a $47.50 put and got paid $0.05 per share. That is 105 in cash upfront. Again, if Dogs drops and I get assigned, I'm happy to own it because I see potential in their model and earnings track record. They recently released a very fantastic earnings report. Then three, I did for hymns and hairs. Last one, I sold it for $38 put. That was the strike price for hymns and earned $2.55 per share, or $255 in total. So this business has been growing fast and I've been tracking them for a while. If I end up owning it, I'm fine with that. It's already on my buy list. So now, what if I get assigned? So what happens is that if these stocks actually drop and I get assigned, no problem. That's when the wheel strategy kicks in. Once I own the shares, I sell a covered call, which means I get paid again to agree to sell those shares at a certain price. In my case, I prefer a strike price that is above my average price or the buying price. Then the option premium price for me to do a covered call will not be that much. So it's literally a loop. I sell a put, get paid, get assigned on the stock, sell a call, get paid again, repeat. That's the wheel strategy. And I actually wrote a book. I'm just having the book edited, and I specifically share some real world examples like I'm doing here and summarize how I specifically use it. So it's one of those few strategies that works in a sideways market and even during dips, as long as you are doing it with the stocks that you understand and you want to actually hold it. This is key. So the risks and what to watch for. Now let's be real for a second. If this isn't a cheat code or a guaranteed win, here are the few things to keep in mind. You need to have the cash to buy the stock if assigned. That's the cash secured part. So for Palantir, it means I have 16,000 US dollars in my account for in case it drops to 160. That means 16,000 for the 100 shares. Now, if the stock drops a lot, like I mentioned, you are still going to buy it. So don't use it on meme stocks or companies that you haven't researched or that you don't understand. Then assignment isn't a failure, it's part of the plan. You are buying stocks you already want just at a better price. For me, I usually take a delta of 0.20 when I'm selling a cash secured. But if I'm a little bit more aggressive, if the stock is really pulled down, I can go maybe 0.30 or maybe slightly above that. So that means in that case, I will have, let's say if it's 0.30 delta, I would have a 30% chance of being assigned. So the other important thing is I always ask myself one thing before I place a trade. Would I be happy to own this stock for the next 2, 3 years, 5 years, or 10 years? If the answer is no, I don't sell the put. So yeah, that's how I made $960 this week just for being willing to buy these good companies I already like. Again, I haven't really realized the money. It's money that was credited on my account. And if I hold it until the end, then that's when I will get to keep almost all the money. Okay, but I can choose also to close it if I see profit and the stock really moves up. I can manage the risk and just take the profit and then repeat the process. So if this helped you, hit the like button so that more people can see it. Subscribe if you want to follow along. I'm documenting my journey to $100,000 portfolio step by step. So if you want deeper coaching or tools, check out www.streetwiseeconomics. Let's grow smarter, no hype, real strategies that I work, and I'm showing you real trading account. So to wrap up, do your homework, be patient, only use strategies you understand, and always invest in companies you believe in. This strategy isn't flash, but it's real. Let me know in the comments if you want me to break down how I choose strike prices, set up the trades. Thanks for hanging out. I will see you in the next video and stay streetwise.